Welcome back to another technical analysis session. This is Steven. Hello. And this week we're going to continue our dive into CBD hemp stocks. This week with one of the older players in the space, but going through a little period of suffering now. We're looking at medical marijuana. The ticker is MJNA on the OTC markets. Definitely a penny stock. They've been around since the early 2000s, 2003, and doing a lot in the CBD space. Let's jump over to the pricing chart. I want to show you a lot of interesting things. So you'll see, I'm going to scroll way back to early 2016. It was trading at about 3 cents. They had some positive news in early 2017, late 2016, bumped them up to 2017, or to 17 cents, sorry. And then they had a rough 2017, back down to about 6, 7 cents, some excitement again in early 2018, and look what's happening, back down to 6, 7 cents. One of the main reasons they struggle, let me show you this. Look at the shares outstanding, 3.4 billion. That is an astronomical number for a penny stock, so it's going to be tough for them to continue to raise funds and get revenue in a position that's high enough that they can actually drive their pricing higher. But we're looking today at the technicals, so let's keep in mind the moving averages that we're seeing here. I'm showing a short-term moving average in red, and that's a 20-period moving average, and I'm showing a longer-term moving average in green, and that's a 200 period. And we're also looking at the CCI, the Commodity Channel Index, which we've seen many times. So let's just zoom in a little bit on 2018 so we can see what's happening during this downtrend. As we know, when the short-term moving average, this red line, crosses over the longer-term moving average, that's a trigger. That's what's called a golden cross, and it would be a bullish signal. And what happened right there? You can see it's right before this huge upswing. We see another one here, and then we don't see one at all. So what's the opposite of a golden cross? And that happens here, which is actually called a death cross. A better example is if I zoom in, happens right here in about July 2018, when the short-term moving average moves below the longer-term moving average. So red drops below green. Here's what happens. That's a bearish signal when we have a death cross, bearish signal. And you can see what happens here. The price is just falling out. There's no bottom here, no support line for this stock is apparent. So this death cross led to huge drops in the stock. So if you trade golden crosses and death crosses, this is an example of a winning strategy for this particular stock. Look what we see now. It's about 6 cents. Definitely oversold in this position, and our price is below both our short-term and longer-term moving averages. Together with this indicator, that we would expect the price to bump up a little bit closer, to be in between these moving averages, closer to the lines, just based on mathematics and this volume indicator. So it may have some short-term gains, but overall this is really suffering. And when we see stuff like this, be really weary of outstanding shares in the billions when you're a penny stock with pretty low revenue. And as always, Golden Cross, Death Cross, CCI, those are your friends. So continue to trade with them, and they should treat you right. Thanks again, and please comment in the comment section if you have any questions.